What is going on, chill investors? All right, guys, I want to make a quick video, okay? Because everyone is terrified of what's going on in the market, okay? We're down. The market just keeps going down. Oh my gosh, what is going on? All I'm going to say, and the main thing I want you guys to understand, and I want you guys to try to change your mindset, is one of the biggest things in the stock market, okay, is your mindset. And if you can change your mindset to be, oh my gosh, the market's red, I'm losing money, okay? You're not losing money, okay? You can't assume that you're going to buy something every time and the market's going to go up instantly, okay? There are things we can do to try to time the market, but you need to have that mindset that something is worth more than it is today long term. Okay. Long term, I just mean a year out. Okay. Year, 2 years, 3 years. Like I see this company is going to be good in 5 years, but I also see it's going to be good in the next year. Right. That's what I'm talking about. If you can change your mindset that, oh my gosh, it's red, it's bleeding, and change it to, oh my gosh, I get to buy this company for even cheaper, that's what you need to be able to do. You need to be able to flip the switch saying, oh my gosh, I get to buy. The perfect example is SoFi, I think, for the majority of people right now, right? If they pull up SoFi, we'll go to the weekly, get rid of all the noise, right? Okay. Oh my gosh, SoFi, right? It was just 32 at all-time highs. Okay, and I was buying at 25, I was buying at 22, I was trying to buy at 21. It just keeps going down, okay? Well, just remember that you bought at 25 and now you get the opportunity to buy it at 17 and you might get the opportunity to buy it at 15. Okay? You just might get that opportunity. Okay? Take it as a gift. Now, if the problem is that you ran out of cash already, that's a different problem. That's not the market going down. That's your own rules of how you dollar cost average into a position. Okay. You need to be, when the market is uncertain, you should never want to just dive all in and build out your position with one buy, right? That's not the game plan. The game plan is to dollar cost average into the position. Whether or not you do a lump sum to get out of the position, that's entirely different. Okay. But for getting in when this market has been uncertain for a while, we've been uncertain since, I would say, going into January. For the most part, I would say right here, this December, that rally that we had, I think ASTS is a better example of one that market was doing this. Yeah. Okay. Yeah, January. I would say between December, January, okay, everyone felt, yeah, we rallied, but there wasn't a whole clear, like, we're going to continue this rally. We were all fairly shaky, bouncing around here in this January time frame. In November, we hit the bottom. December, right, we rallied. Okay. Like, we were never 100% we are a bull market run. We knew in the beginning of the year that one, the government could be shut down. Powell traditionally does not cut interest rates in the beginning of the year. He, drags his feet and then waits to the second half of the year and then starts cutting rates. So we knew that was coming to play. We already knew there was potential war coming into play. Like all these things have been known, and that's what you're seeing is already kind of priced into the market for the majority. Like, yeah, we can still see some downside, right? We're not super oversold. We are November. But if you look at April, right? April came down to this red line. We have a long way to go for the SPY to get down here to this red line. I don't think it gets to this red line right now. But that is a 16% correction from the current place it is now. And that is from the top, roughly 19% correction. Okay. We had from this recent top, wherever it was right here, down to this bottom below the red line, just for a peak was 21. And just to the red line was 19%. Was 19%. Same exact percentage down. It is playing out roughly the same way. And that's what people have been calling for, right? They've been saying, we're going to go down. We're going to touch this red line. I don't think we're going to touch the red line. I think we do come down here to the 6,600 line right down here and hold this support. But all I'm saying is that we were at all-time highs. You do not deploy all your cash at all-time highs. Okay, all-time highs. I don't like. Yeah, you can keep running and just keep buying into things, but you need to be buying things at support levels. For us in our community, what we're doing is a bunch of cash secured puts. If you don't know what cash secured puts are, essentially what this is, and I'm going to break it down in simple terms to make sure that this video is a fairly quick video for you guys, is that basically we'll use SoFi for an example because everybody loves SoFi, okay? All we're saying is buy a certain date. For us right now, we're picking April 17th, so which is roughly 45 days from now. And I'm saying if SoFi is still below $16, April 17th, I will buy those shares. Okay? That's all I'm doing. It's not even $16. But if it gets to 16 and stays below 16 on April 17th, I don't care what the stock does between now and April 15th, right? Or day before April 16th. I don't care what the stock does. All I care about is on April 17th, is the stock above or below $16? If it is below $16, I have to buy the shares for $16. Okay? If the stock is 15, I still pay 16. Okay? I'm signing up in advance. Okay? They pay me for this. They pay me in advance. Okay? So let me go ahead and show you what I mean. We're going to go to SoFi. And I'm sure the market might open while we're even talking about this, and you might see how bloody it is. But what we can do is we can go to sell put. We'll go to April 17th. Okay? And right now, I could sign a contract saying I will buy SoFi for $16 on April 17th if the stock is below 16. Okay. If it is not below $16, I just keep this premium, right? They just pay me the 95 cents a share per contract. One contract is 100, therefore 100 times 95 cents is $95. They will pay me $95 to sign this contract to buy a company I already want to buy at a low price. Okay? I think that's a win, right? That's a win. I'll take it. I get to sign up for buying a company at a price I want to own it for, less than the current price it currently is. And if it doesn't get there, I make money. If it is below 16, let's just say it's 15, I get to buy it for 16, so $1 above, okay? But they paid me basically $1 in advance. So my break even is what? 15.05. So I'd be down 5 cents from if it was 15 on April 17th. Okay? But I'm signing up. You would already be buying SoFi currently right now for 17.68. I'm just saying I'll buy it for 16 if it's below there. Right? I'm buying SoFi in advance for cheaper than it currently is today. I have no problem with that. I'm buying it at good support, good levels. If we take a look at our chart on SoFi, right? This red line right here is 15. Our 200-day moving average is 22. Our 50-day moving average is 23. The 100-day moving average is 24. Why wouldn't you want to buy SoFi for one right now at 17, but why wouldn't I want to buy it for 16? Why wouldn't I want to buy it for 15? So you can sign up in advance to sign that. And that's what we're doing in our group. We're going ahead and placing CSPs for a later date. April 17th is the furthest right now that we are going out to set these CSPs. And we are saying we will buy these shares if they maintain below this X amount of whatever price, we will buy those shares. But I want to make some money while we wait to buy these shares. That's what we're doing in our community. So these are just better opportunities for us to actually sell and buy shares. So we're selling options to buy shares at a lower price. I don't care if the market goes down. If the market goes down, it's more likely that I actually get the shares I want. But I still need SoFi to drop to 16. I still need SoFi to drop 10% from Friday's close. That was already roughly, I don't know what it was. Let's see, which was already 7%. So I'm going to buy it within 2 days, a 17% drop, and they're going to pay me an additional dollar. So I'm actually going to get to own it. Technically, my break even price is 15.05 based on those numbers. It's going to be even better tomorrow. 15.05. So I'm going to get to own it for another 15% drop on top of a 7. So I'm going to get to own it for a 22% drop in price in advance. I'm already signing up for it. I'll take it. I want to own it, right? That's what we are doing. So, and guess what? You get to do it the same way. If you wanted to buy 100 shares, okay, that's one contract. You want to buy another 100 shares when it gets to 15? That's another one contract. It's the same dollar cost averaging. You're just doing it for your future self. What do you want to own in April? I want to own some SoFi at this price. I want to own some of this. That's how we're doing it, okay? So a lot of companies are at good supports. Some are well below APLD, well below all of the moving averages. SoundHound sitting right above its red line that it just generated. BBAI sitting and holding right above its red line. APLD has barely been touching this green line as far as support goes. So where are we? We're right there. We're going to be looking for a red moment to give us another opportunity. Okay. So that's what I got for you guys. Keep the mentality positive. Look that it is a better opportunity for your future self to make even more money with today's prices than they were even last week. Okay. Have that mentality, dollar cost average in, and you will set yourself and your future self up for even greater potential. All right, guys. I appreciate your support. I'll see you guys in the community. Thanks.